What can you do when you owe nothing on your home and you want to be creative about how you take money out of your home in a meaningful way for longevity, for your kids to enjoy your golden years, etc.? Well, with the reverse mortgage, you can do some pretty cool stuff. Here's an example. Let's pretend like we have a borrower age approximately 70 years old. They own a property that's worth $500,000 and they owe nothing on that property. Let's say today they could probably obtain a reverse mortgage of approximately 50% of that. So we would give them approximately $250,000 in a reverse mortgage, of which there's never a monthly mortgage payment on. Okay? So now, with that $250,000 reverse mortgage, there's a bunch of different ways that you can take this money. We're not going to go into all that detail in today's video, but what I want you to understand is a couple key things. Number one, any monies that you borrow, any monies that you take on this $250,000 is going to be non-taxable money. This becomes a great source to be able to draw from if you need to take some money and you don't want it to be a taxable event. The reason why this money, you don't have to borrow all the $250,000, but any money that you would borrow from that $250,000 pool of money is non-taxable. The reason why is it's part of a loan. It has to be repaid when you sell the property. When mom and dad pass away or when that property gets sold, whatever is owed against the reverse mortgage has to be paid back. Now you still get to take whatever equity is left over above and beyond what is owed on the property, but it's non-taxable. Also, any monies that you take from this will not affect Social Security or Medicare, because again, it's not a taxable event, so it won't mess you up with Social Security and it won't mess you up with Medicare, okay? Now, it could mess you up with Medicaid. You have to be careful with Medicaid because you're only allowed a certain amount of money at the end of each month in your checking account with Medicaid, but with Medicare and Social Security, it won't affect that. So I want you to keep this in mind. This becomes a really powerful tool, this $250,000, or the ability to use some of that, to borrow some of that, to be able to live. Because the facts are is that if you're in a market where you have some money in an IRA or a 401k, if the market's taking a 10 or 20% dip, it probably is not the wisest decision to pull money out of that. Instead, it may be better to take it out of this for that particular year, use some money out of there to live on, to go do something, and then wait till the market comes back up to then pull that money out of your IRA or 401k. So this just becomes a buffer asset, an additional thing to give you more financial peace of mind and more financial freedom in the time of your life when you need it the most. If you have any questions, please give me a call.